Hello and welcome. You tune in to Market Fatafat. I'm Ankita Saxena and with me is Ashish Advari. In the next half an hour, we'll take you through all the top buzzers in the trading session. Why they are buzzing on the back of news flow or on the back of technicals, we'll get you all of that and more. But before we get going with all the names, let's take stock of how the market is shaping up at this juncture. Well, as far as Nifty is concerned, like I said, 25,650 is what Nifty is holding on to. So it's a very sideways move that Nifty is showing, since we saw that that bit of a decline that came in from the highest point of the day. Then we turned sideways. So right now, in any case, it's holding on to gains of 95 odd points. 25,650 is what Nifty is holding on to basically. As far as Nifty Bank is concerned, that's clearly underperforming and has turned very, very flat, and it's still hovering around those levels of 61, 120. Cuts of almost 50 odd points is what Nifty Bank is saying. So Nifty Bank is also very, very flat right now. As far as the broader markets are concerned, it's the mid-cap that's seeing the sharpest knock. Mid-cap is down almost 0.3% right now, even though it has recovered a little, because we did see a downtick of more than 0.5% coming in on mid-cap. So from there on, it has recovered, but nonetheless, it is trading with cuts of almost 0.3%. But let's talk about the sectors now. We have Nifty IT that's seeing the sharpest fall. Now remember, Jefferies has given the IT pack a downgrade, and on the back of that, 1.4% downtick is what Nifty IT is seeing. There's Coforge that's down 3.6%, Emphasis, Persistent. The entire mid-cap space for IT is reeling under a lot of pressure. Even the large-cap names like Wipro, Infosys, TechM, TCS, they're also trading with cuts of more than 1%. We have Nifty PSU Bank. That one is doing well today. That's trading up 1%. India Bank is up almost 3%. We have Union Bank that's up 1.8%. Canara, IOB, Bank of Baroda, all of them are trading with gains of more than 1%. So the PSU banking pack is leading from the front. But let's get started with the show. Ashesha, tell us what's in store for us.
Well, yes, we'll discuss all of these stocks and sectors in just a bit. But before that, on the technical side, we are now joined by Mr. Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial Services. Mr. Bhagwat, afternoon. Thank you so much for joining us today. We'll come to you in just a bit, but before that, let's talk about IDFC First Bank. That's the biggest accident of the day. In fact, the last time I checked, the stock was down 15%, and this is on the back of a fraud announcement that came in from the company. The company did inform the exchanges about a 590 crore fraud that was uncovered at Chandigarh branch. This involves government-linked accounts. And that is the reason the stock, as I mentioned, it is still down 16%. It has barely recovered from the lowest point of the day. Now, after the 590 crore fraud announcement that the company made, Haryana government has now stopped all government dealings with IDFC First Bank. The management, in fact, spoke to investors in a con call today morning, where they said that the incident is isolated. It is confined to a single branch in Chandigarh. The transactions were executed using forged checks and manually carried out at a branch. Managing Director and Chief Executive Officer V. Vaidyanathan told investors. So that's the news because of which the stock is declining in trade. Now, Haryana government contributes about 0.5% of total deposits of the company. State government contributes about 8 to 10% of overall business for the company. So yes, on the back of that news piece, the stock is under pressure, down 16% as we speak.
All right, while moving on from one banking name, which is the accident of the day, to a stock that has done pretty well for itself, and that's Federal Bank. That's up more than 3% in the last 5 days. In fact, it has given some. It's given almost 50 odd percent returns in the last 6 months as well. On the charts, what are the next levels to watch out for, Akshay?
Good afternoon to all. Firstly, this technically it's a very strong uptrend which continues in Federal Bank. The last few sessions has been a bit slow. Volumes are a bit dull, but what I understand going by the charts that 310 to 318 are the possible upside targets which are open for Federal Bank on a short-term trading perspective. The support is at 285, below which you need to maintain your stop losses.
Okay, so that's the view coming in on Federal Bank, the stock gaining in trade. But let's also talk about Morepen Labs then. The stock is in focus on the back of an order win, Ankita.
That's absolutely correct. Morepen Labs that's bagged an order worth 825 crores. It's a CDMO deal and the shares have surged. In fact, they were up in a way. It's up 18% right now. It's touched its record high today. After it has secured a multi-year contract for the development and manufacturing organization, the CDMO mandate, like I mentioned, that's worth more than 800 odd crores from a leading global pharmaceutical company. And they said that the supplies under the agreement are expected to commence within the next 4 to 5 months. And this execution is scheduled through the first quarter of the following financial year, subject to customary operational and regulatory processes. But on the back of this big order win, Morepen is up in a way almost 18% in the trading session.
Well, yes, order win is the reason the stock is up 18% in trade. But let's also talk about CIE Automotive. This stock is in focus on the back of several brokerage reports that have come in this morning. One, of course, is Motilal Oswal. We also have Axis Capital, which has come out with a report on this counter. Motilal Oswal has maintained its buy stance on the stock, but they've gone ahead and hiked their target price to 539 from 499 rupees per share earlier. They say consolidated revenue in the third quarter grew in double digit. This was largely driven by India and favorable forex impact that the company enjoyed in the third quarter. India business delivered strong margin expansion that is likely to continue going forward as well. Order inflows continue to remain healthy for the company. This is supporting medium-term revenue visibility for the company. Strong free cash flow generation and net debt-free status is why they believe balance sheet position continues to remain very strong, and that is likely to strengthen going forward as well. India is expected to anchor earnings growth for the company, India business, and Europe is stabilizing now at lower levels. So very positive report that has come in from Motilal Oswal. Axis Capital, as I mentioned, has also come out with a positive report, and that is the reason the stock is gaining in trade today.
All right, moving on then. Akshay, you picked out Jubilant FoodWorks for us. Tell us on the charts, what are the levels that you're tracking?
Yeah, so I believe there is a bit of flows following the FMCG pack, considering the volatile conditions in the market. And if you look at the price charts of Jubilant Food, there's a possible bottom fishing which I see at the levels of 500 going by the last couple of weeks of price volume action. So there's a small support building at the levels of 520, and the price charts suggests that there can be a bounce back till 575 to 590 on the upside, and you can maintain a stop loss below 510 on this buying position.
All right, so those are the levels to watch out for on Jubilant Food. But let's move on to the next name that is in focus, and that is Axis Bank, one of the names that are from the banking pack that's doing well. It is on the back of the fact that they have clarified that it has neither submitted nor does it plan to submit any bid for the stake in Credit Axis Grameen. Now, they said in a clarification that was being issued in response to certain income inquiries regarding its bid for a stake in Credit Axis Grameen, the lender added that there is no material event or information in the matter that required disclosure under the SEBI norms. Now, it said that it would continue to make disclosures in compliance with its obligations under the SEBI regulations. And on the back of that announcement, the clarification that's come in from Axis Bank, that stock is up in a way 1.5%.
Okay, so that's Axis Bank for you. Many more stocks to be discussed on the other side of the break. Don't go anywhere. Welcome back. You're still tuned into Market Fatafat here on ET Now, and this is a show where we discuss all the stocks that are buzzing in trade today. On the technical side, we still have Akshay Bhagwat with us, but let's also talk about AU Small Finance Bank, because that is one counter which is under pressure today, and this is on the back of a regulatory announcement that came in overnight, where the Haryana government has disempaneled AU Small Finance Bank for government business. Haryana government has issued revised guidelines for dealing with banks, and nationalized banks, they say, will have to be preferred for opening government bank accounts. AU Small Finance Bank has of course clarified. They've given a clarification to the exchanges where they say that there is no indication of financial impact or fraud on the bank so far, which is the case with IDFC First Bank. But AU Small Finance Bank has been very clear. They are saying that there has been no fraud. The only trigger for the stock to decline in trade today is the fact that Haryana government has disempaneled the bank from undertaking any kind of government business. Bank board has been informed of any kind of internal review which is currently underway. Some employees have also been placed off duty to ensure transparent review. And AU Small Finance Bank is engaging with Haryana government to understand and identify why they have disempaneled the bank. So on the back of this news piece, the stock is under pressure today.
All right, moving on from AU Small Finance Bank to Shriram Finance. Akshay, Shriram Finance is one name that has been a clear outperformer. On the charts, what do you see from here on? Do you see the up move continue?
Absolutely, it's been an outperformer till date, and even on the technical charts, despite the volatility around in the market, this stock is continuing to move upwards. A strong uptrend clearly on technical charts. Last 6 days, it's been kind of range bound. I believe one more round of upside is still pending in Shriram Finance. So targets are working out till 1125 to 1160 as of now, and the support is at 1020, below which you need to maintain your stop losses.
All right, moving on from Shriram Finance to yet another counter that is in focus, and that's Solar Industries on the back of a brokerage note initiation by Motilal Oswal. And they've initiated the coverage with an overweight, and they've set the target price at 16,151, which is a 21% upside from the Friday's closing price. Now, they feel that the company is favorably placed for defense mega trend. They also feel that the defense business is likely to increase from 27% in FY26 estimate to 44% in FY30. And the defense business is also going to be driven by execution of the order book and the new orders as well. The government has banned the import of rocket shell and drones, while the defense exports are encouraged. Now, the defense order book is up almost 16 times, and they also feel that it continues to have a 26% market share in the steady domestic explosive business, and international explosive business is the growth driver for them. And with a presence across 10 countries, the company is diversified the supply chain across Africa, Australia, Turkey, and Central Asia. That improves the earning resilience for the company. On the back of that, they're maintaining an overweight, and Solar Industries is in focus on the back of that.
Well, yes, Solar Industries in focus on the back of that brokerage report, but another counter which is under pressure today is UPL. The stock, in fact, is down 15% as we speak. The company informed the exchanges about a restructuring plan where they said that they will de-merge the existing agri-business with the global listed peer. This, of course, has not gone down well with investor community and with the analyst community. Although the company is very bullish, brokerage houses clearly are not. Nuvama has downgraded the stock to a hold rating. The revised target price now stands at 816. They say post-restructuring, net debt largely remains unchanged. But given the run-up that we have seen in the stock so far, dilution from the merger and unresolved leverage continue to remain an overhang for the stock. In fact, not just Nuvama, we have Elara Capital. That one also is not very bullish. They say that restructuring fails to simplify the structure or unlock value for shareholders. It is a short-term negative. It shifts narrative from financial discipline to restructuring flaws. So brokerage houses clearly are not bullish. It has not gone down well with the investor community, and that is the reason the stock is declining 16% in trade today.
All right, moving on now from there to the next counter. Eicher Motors is what you picked out for us, Akshay. In fact, Eicher is doing well today as well. That's up almost 1% in the last 5 odd days. It has seen some movement, 0.5% gain coming in. What are the levels to watch out for?
So positive uptrend continues in Eicher Motors. The key levels would be the support of 7890, and this support is a short-term trading support. Until the stock trades above this level, the view continues to be positive. Most likely the targets of 8400 to 8450 are open on the upside.
All right, moving on then from Eicher Motors to the IT pack that is in focus on the back of the Jefferies downgrade that's coming in. In fact, on the back of that, the entire IT pack is in focus and seeing that downtick. But let's talk about the note then. As far as the highlights of the note are concerned, they feel that the AI risk outweigh the near-term earnings delivery, and the IT stocks are down almost 14 to 16% year to date. But Jefferies sees more downside than the upside. Also, the EPS estimate has been cut by 1 to 4%, except only 6% earnings, 6% CAGR from FY26 to FY28. The stock is likely to move on long-term AI impact and not the quarterly earnings, is what Jefferies is saying. And also, Jefferies estimates a 3 to 14% below consensus, implying risk of earnings downgrade. Also, as far as the downgrades are concerned, they're cutting the price target to 33%. The downgrades from buy to hold are Infosys, HCL Tech and Emphasis. As far as the downgrade from hold to underperform is concerned, it includes TCS, LTI, Mindtree and Hexaware. What still remains a buy is a Coforge, Agility and IKS. So these are the buy calls that still remain for Jefferies. But nonetheless, they're seeing they have downgraded the entire IT pack.
Well, yes, and Nifty IT index is the biggest sectoral loser in trade on the back of that Jefferies report. But shifting focus to the auto sector, Ashok Leyland. Akshay, why have you picked up this stock for us today?
So again, the auto pack is the only pack which I see there is good strength on the technical charts, and Ashok Leyland is one stock which continues to move in a very strong uptrend despite the volatility in the market. Again, it is above all the short-term moving averages, a clear uptrend in sight, and targets of 220, 225 are the next levels one can look out for. There is a support at 200 below which you need to maintain your stop losses.
All right, that was the last stock of the day, Akshay. Thank you so much for joining us and giving us all your picks. But let's move on, and speaking of the sectors and the stocks,